And good morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments for Friday, January 20th. Well, it's been a shortened week here with the holiday that we had on Monday. It's been an eventful week as far as open interest and player sheets go. We talked about that and/or the trade watching about Argentina. The trade this week kind of rallied itself back on up to top end of what we think is maybe somewhat trading ranges, that being roughly the 450 area in the May wheat, 370 in the March corn, and 1080 in the March beans. For the week so far, we're down roughly 1 to 10 cents in the wheat markets, depending on what class you want to talk about. We're up around 7 cents in the corn, up 15 cents in the beans, up around $11 in the meal, but down 20 points in roughly the soybean oil. Overnight trades a little bit on the defensive. We're down fractionally in the wheat and the corn. We're down around 8 cents in the beans. We're down around $3 in the meal. And we're kind of near the unchanged level in the soybean oil. But having said that, once again, after being an up week, we're at those highs of the trading range. We're backing off in the overnight session. Having said that, we talked about the two things that was kind of prevalent throughout the whole week, that watching Argentinian weather, that the trade wanted to go and talk about as far as being a potential problem down the road. We did see we're at the Ag Ministry from Argentina yesterday, but some of the grain exchanges came on out. And the USDA is currently at around 57 million tons for the Argentinian bean crop. They now lowered their crop. One of the exchanges lowered their bean crop down to around 52, 53 million tons versus 54. So there is a little bit of a quote-unquote problem concern down there, but it's not as low as what some of the trade was talking about earlier, around 49 million tons. Having said that, we may have once again saw the gamut as far as running the market on up to the top end of trading ranges. And the other thing that we talked about this whole week was also the influx of money, the influx of open interest, the influx of players getting long, particularly the corn, beans, and meal. And if we're at the top end of the trading range and we find out that the Argentinian stabilizes during the month of February, and we find out that later on this morning we'll get our export sales coming out in roughly around 5 minutes or so. If we start to lose demand, are we going to go and find that we sink from the rally that we saw this week? Once again, the open interest yesterday in the corn up 12,000 contracts, the beans up 10,000, the meal up 4,500 contracts. Getting even longer the beans as far as commitment trades report coming out after the close today. Long 139,000 beans, 44,000 meal, in the neighborhood of around 73,000 soybean oil. They lighten up their short positions in the corn and the wheat. They're short around 82,000 softwood winter wheat in Chicago and around 57,000 corn. But once again, are we going to go and find a sustained strength and have an extended gain as we work our way through the end of January into February after the buildup that we've seen in the marketplace with the longs, top end of the trading range, and if Argentina goes and finds out that they're going to be okay with their crop going forward, and we find out that our demand starts to sink. So once again, export sales in a little bit, top end of the trading range, the trade got long. My opinion in here is that maybe we kind of settle back into the trading range going forward in here. We'll watch what happens with the Argentinian noon updates as far as weather goes. Once again, these are my opinions, not that of ADM or ADMIS. And thank you for your time this week.